Hello everyone, welcome to today's session in Quantsapp. In today's lesson, we will be talking about VCP, that is your Volatility Contraction Pattern. But before starting the video, if you are new here, you can go in the description. There is a link below. With the help of that, you can download and install Quantsapp app application. After successful registration, you will get some free tools in the application that will help you out in your trading. Okay, in the application, we have a video library. So in the video library, we have made multiple videos for you. These videos are based on Pro Plus tools as well as various strategies, okay, and also available in multiple languages. So you can watch these videos in your main time. Now at any point of time, if you guys are having any kinds of doubts or query, so you can directly go here in the profile section, and in the support you will get our contact number as well as email ID. So you can contact us and we will be there to sort your queries out. Right? So let's start today's lesson. And in today's lesson, we will be talking about VCP. Right? VCP. Now, the VCP stands for the Volatility Contraction Pattern. Okay, so as the name suggests, we will be talking about volatility, and whenever my volatility will be contracting, okay, at that time I will initiate my trade, but with certain confirmation as well. Right? So first of all, what we will do, we will see like in which stock I am getting a movement of 10 to 15%. Okay, so I want a movement of 10 to 15% in a particular stock or index, right? So whenever I will get that stock or that particular index in which I am getting a momentum of price like approximately 10 to 15%, okay, so that will be a hit list stock or index for me. Okay, I will go and trade it, but with certain confirmations, right? So what will be those confirmations? So I'll show you. Okay, so first what I want a 10 to 15% movement, okay, in that particular stock or index, and it can be in one candle, it can be in 2 or 3 candles as well. Okay, so for suppose I am getting a movement of 10 to 15% like this, okay, in 3 candles. Okay, it can be green or red, okay, but the market is moving up, so obviously they will be green candles, right? So I'm getting a 10 to 15% in this stock, as well as at the same time I can see if this is my volume, okay, so I can see there was a good volume in that particular stock as well. Okay, so my volume was above this average volume. So this line denotes my average volume. So my volume is above this line. It means the volume is also good. Okay, so volume is also good, and in this candle I am getting a 10 to 15% movement in the prices, right? So these are my two conditions. Okay, now why it is happening here? Why I am getting a 10 to 15% move here? Because there must be some good players, there must be some big players, financial institutions, okay, which are taking trades or which are entering in the market, and that is why I am getting a movement here. Now, usually, it is, there are very rare chances that you will be able to capture this move, okay, but we will enter in the trade, okay. How? So, first of all, we have to wait for a retest, okay, so there will be a retest in the market, right? So, the market will be retesting itself, okay, so it will come a little down, okay. Now, make sure when the market will come down, okay, so there will be, and it will be creating a swing low here, okay, so it will be creating a swing low here. Okay, after this swing low, the market will again move in the upward direction a little bit. Okay, and after that, the market will consolidate itself. Okay, so the candle will be little weak. Okay, so the market will contract itself. Okay, the market will consolidate itself. Okay, but it will not break the swing low. Okay, it will not break the swing low. That is the condition. Okay, now this candle can be red, this candle can be green as well. Okay, so this candle can be red or green as well. Okay, now why it is happening here? Because when there was a good movement in the market at that time my volatility increased. Okay, at that time my volatility increased. Okay, now when we talk about volatility, so volatility always moves in a range. Okay, my volatility is always a mean reverting. It means it will revert from a certain level, right? So when I got this movement, a 10 to 15% at that time, so this is, I'm talking about volatility here. Okay, so at that time my volatility spiked up, right? So if my volatility spiked up and then again my market went down, made a swing low, and again went up, then there is a consolidation in the market like this. Okay, so it means now my volatility is cooling itself down, right? And when it will cool itself down, it will usually come at the bottom or near bottom, and then it will move somehow like this. Okay, so it will stick to the bottom. That is the second property of my volatility, that it will always come to the bottom, and it is a sticky nature. It means it will come to the bottom always, okay, or near to the bottom, right? Okay, now what I have to wait for now, I have to wait for the market to break out again. Okay, so now I will have to wait for the market to break out again, and that will be my opportunity to enter in this trade. Okay, now I will be waiting for the confirmation. Okay, why? Because at the same time I want my volatility, it will be again increasing. Okay, it will be again increasing, so that will be my first confirmation. Okay, I want my volatility to increase. Okay, at the same time, when the market was consolidating, okay, so when the market was consolidating, at the time, what I don't want volume to be very high, right? So at the time, what I want volume to be less than this average volume. Okay, this is the average volume. So I want my volume to be less than this average volume. Okay, so this means this movement will not sustain itself. Okay, and again, if there will be a good volume again in the market, so at that time again it will break the high. Okay, it will break the resistance, you can say. Okay, it can break the swing high, you can say, and then again it will move in the upward direction, and that is the opportunity for us to enter in that particular trade. Okay, so I hope the concept is clear. So what we will be analyzing, I'll summarize it again. Okay, so I want a good momentum in the market, like 10 to 15% with a good volume. Okay, then the market should be retesting itself. Okay, retesting, and after retesting, it should be making a swing low in the market, right? So the retest, it will not be that much, but if my movement was of 10 to 15%, so the retest will be of only 5% to 6% only. Okay, not much more than that. Right now, after retesting of the market, my market will consolidate itself with a very low volume. Okay, with a very low volume, and then you have to analyze the IV also. Right, so your IV should be increasing, then it should be sticking to the bottom, and then whenever there will be again increase in the volatility, okay, and the market will break the resistance. So at that time, we will initiate our trade. Okay, so I hope the concept is clear. Let's practice it in the real application. Okay, so for that, I'm jumping into the Quantsapp application here. Now in the Quantsapp application, I'll show you some example. Okay, so I'll clear the concept with a certain example. So I'm directly going in the analyze charts, trade and order. Okay, now currently I have opened Jambuja Cement. So let me see in Ambuja Cement if I'm getting a 10 to 15 movement in the market. Okay, so you can see this was the moment when I got a good movement. Okay, so these are the candles which gave me approximately 10 to 15% movement in the market. But at that time, my volume was not good, right? So this is not the opportunity for me to take a trade, right? Agar kisi ne, if somebody would have taken a trade here, okay, so you can see now, you can see again, you can see the market went in the upward direction. The market went in the upward direction. Okay, then made a high. There was a you can say a retest in the market. Okay, so the market made a swing low. Okay, after that it went upward. The market consolidated, but it does not went in the upward direction. Why? Because when we got a 10 to 15% movement, okay, what was our condition? We want good volume as well. So you can see here the volume was not good, and that is why the strategy failed here. Right? So you have to take care of each and every step whenever you are going to follow any strategy. Okay, so let's see what are the other examples we can get here. So in Ambuja Cement, I'm not getting any examples. So let me switch the stock here. So let's go with another. Just a second. Let's go with another stock here. So let's go with Infosys. Okay. Now why I'm going with the Infosys? Okay, I'll show you an example again. Why I'm going with the Infosys. So you can see here. Just a second. You can see. Why I'm going with the Infosys? Because in the index contribution, you can see Infosys gave me a movement of 9.26%, and this is one of the stock that has capability that it can move 10 to 15% okay, in a single day. Okay, so that is why I am choosing this stock, right? So if you have Quantsapp application, you can just watch the stocks from here as well, from the index contributor. Okay, like okay, the Infosys has given me a movement of 10 to 15%, or the Power Grid has also given me a movement of 10 to 15%. Then you can wait for the market to retest and consolidate, and whenever the IB will spike up, then you can enter in the particular trade, right? So for the example, I will be taking Infosys here. Okay, so I will be taking Infosys here. So let's go with the Infosys Infi. Okay, so this is Infi. Okay, so I have applied the daily time frame. Okay, you can apply the strategy. in this time frame as well or in 1 hour time frame as well, but make sure you apply this strategy in a bigger time frame, okay, so that you will get a consolidated trade. Okay, so now let me remove this one first of all. Okay, now in fee we can see we got a good movement here. Okay, you can see these three candles, you can see these are the three candles in which we got a good movement. Okay, so these are the three candles in which we got a good movement, and when we got a good movement of 10 to 15% approximately, okay, at that time you can see the volume was also good. Okay, you can see the volume is also crossing my average volume line, right? It means this is a valid movement for the market, right? The big players are into it. Okay, then after that what happened here? Then you can see market went up 10 to 15%. That was our condition. Okay, with a good volume. Okay, so the first condition was done. After that, my market went in the downward direction. So it is a retest for the market. Okay, there must be some profit booking, and the market made a swing low here. So you can see the market made a swing low here, right? So this was my swing low. Okay, after that, my market went in the upward direction, and then there is a consolidation in the market, right? There is a consolidation in the market. And after that, I got a good candle here as well. Okay, the market broke its high as well. At that time, I got a good volume in here, you can see. Okay, so there was good volume as well. Okay, and then the market broke out itself. Right? So this is one of the conditions. Now we will confirm it again with the implied volatility. So let's check the date here. So when I got good momentum, just a second. Okay, so when I got good momentum here, you can see the date was 5 June. Okay, after 5 June, when the market was consolidating itself, so that was 26 to 27 June. Okay, when the consolidation actually started in the market, right? So that was 26 to 27 June, and then the market spiked up. Okay, so we will confirm it with the implied volatility. So for that, I am going here in the analyze section in the IV chart. Okay, and in the IV chart, this is actually IV. The white line is your volatility and the blue line is your price. Okay, so you can relate both of them as well. Okay, so I will go with the 5 June. Okay, so let me see where my 5 June IV is. So currently I am here at the 18 June, and from the 18 June, 10 June, 3 June. Okay, 4 June. So you can see when my market was at 4 to 5 June, at that time my IV, you can see the white line here. So my white line was at the peak. So my volatility increased, spiked up. You can see the 28.77. Okay, if I show you here more clearly, so I think that will be more visible to you and more clear to you. Okay, so 5 June, you can see 5 June. So on the 5 June, you can notice my volatility on 4 June and 5 June, my volatility was at its peak. You can see 28.77, right? And on the 5 June as well, we saw on the 4, 5, 6 June, we saw a good movement in the market. That means there are some big players that are initiating their trade, right? So that is why my IV spiked up. You can see 28, that is the highest, 28 and 29, that is the highest IV, right? Now, after the spike up of the volatility, it will cool down, right? It will cool down. So as you can see, the volatility cooled down itself, okay? And then it was at the bottom and sticky to the bottom. So it was consolidating at the bottom, you can see, right? So you can see here, let me show you. You can see the IV cooled down, okay? Let me change the color of the market just a second. Okay, so you can see the IV cooled down. After that, my IV just, it was moving at the bottom, right? So let me show you here as well. So on the 5 June, 4 June, 5 June, the IV was very good. Okay, after that, my IV decreased. Okay, IV decreased and to 16, 12. Okay, and then when the actual movement started in the market, right? Then you can see from 12. So 27 June was the date when the actual market movement started, right? So you can see again from 12 IV, my IV just jumped to 27.46. It means again there is a momentum. So 27 was the date when I would have entered in the trade, right? And then you can see again the IV started moving up, and at the same time from 1536 to 1634, and then 1658, and then 1709. So my price also increased up, then 1820, 1887, right? So this is one of the strategies that will help you out to find the particular trade, okay, to find a particular stock, okay, and at what time you have to enter in the trade, okay. So and it will also give you proper target as well. Okay, now if I'm talking about the target, so let me tell you what will be your target and what will be your risk reward ratio. Okay, so if I am going with this strategy, okay, so I have so much confirmation with me, I'm confirming this strategy with volume as well. I'm confirming this strategy with a breakout of my resistance or the high, you can swing high as well, you can say, right? So the risk reward ratio would be the risk reward ratio would be 1:2, right? It is the minimal risk reward ratio that you can take. Okay, the strategy can give you, it is capable to give you more than 1:2 as well, right? But the minimum risk reward ratio you should be following, that is 1:2, right? Okay. Now talking about the profit, okay, so if the market is giving me 10 to 15% move in the first half, okay, and then we were waiting for the consolidation and then a movement, okay, so again we can expect at least 8 to 10% movement again from the market, right? And if I'm expecting 8 to 10% movement as my target or profit, okay, as a target or profit, then for the stop loss you can just go for 2 or 3%, okay, so that will be your stop loss as well for the market, right? Or you can just decrease it as well from 1 to 2% as well, okay, so it will work. You don't have to worry about that, right? So this is the strategy that is backed up with the volatility, okay, backed up with the volume as well, okay, and it has the technical analysis confirmation as well, right? So I hope the concept is clear. Okay, so I try to give you a proper explanation of this strategy. If you like this strategy, you can share your views in the comment section as well. You can share this video with your friends. Make sure if you are new here, you should subscribe to the channel as well. So thank you so much, guys. This is your trainer Ankit Singh Rawat. Have a good day.